Hey everybody, it's Kevin Clark, and I am the person responsible for programming the software to deliver you the personalized and ongoing advice that you receive every month for your future recommendations and when to rebalance. So today we're only changing the future recommendations. Today's June 1st, and we're going to change it to intermediate government bonds, U.S. small value, as well as utilities. So most 401ks should have an intermediate government or intermediate term bond allocation in there, as well as small value. Utilities you may or may not have. If not, you're going to get a little proxy, and it's going to tell you to put it into the nearest category. As for last month, we heard some feedback. Many of the 401k plans never had commodities broad basket, U.S. equity energy, or non-traditional bonds, so they were all proxies. So this month, we're trying to get back to some more of those core options that most 401k plans have. Obviously, we're going to match you up as close as we possibly can, given the investment options that your employer has chosen for you. And what we're trying to do with these future allocations is to have you buy things when they're on sale. So normal employees are normally paid, twice a month or so. So each time you get paid, you have money going into the plan, and what we're trying to do is buy more shares of things that are going to be on sale. So that's the plan this month. We'll see how we did. Last month, it was a tough month because the first few weeks, everything was down, and then everything popped dramatically within that last week. So the markets itself were pretty much flat. You'll see that in the following section here. And 2/3 of everything that we monitor actually was making money last month. So we hit the money on the head with the non-traditional bond, but the commodities and the equity energy actually were up for the month. Specifically, the equity energy was up really, really high because the price of oil keeps getting more and more expensive, which is terrible for us at the gas pump, but good if you own it in your portfolio. So we're going to do this every single month. I'm going to let you know exactly what we're changing. Log in to your Plan Confidence account with the URL that's provided to you via the email from your financial advisor, and check out the exact recommendations based off of the models that you are using. And if you have any questions, do not hesitate. Ask your financial advisor. If there's any feedback or anything that we might be able to help you with, or features you might want to see within Plan Confidence in the future, let your advisor know as well too, and then they'll let me know, and then we'll figure out what we can and can't do. With that, make it an awesome, awesome June. Good morning, everybody. This is Kevin Clark, and I just wanted to touch base real quick before I run into the gym. And yes, I go into the gym with Plan Confidence t-shirts and hats on and stuff. I'm a walking billboard. Um, Anyhow, real quickly, I just want to get everything out to you as quickly as I possibly can and go through obviously all the numbers that came in for the month of May. The 4-week returns, according to Morningstar.com, the S&P 500 basically remained flat. It didn't really do much. Went down for the first 3 weeks and shot straight up in that last week. Technology, the heavy tech industry, was down about 3%, extending its downward losses for the year. And intermediate bond was up just about 0.4%. So pretty much the markets remained flat or went slightly down for the month of May, even though we had 3 pretty bad weeks going into the beginning of May and one super good week coming out last week. The year-to-date numbers, then the S&P is down about 13% right now. The tech industry is down about 28%. So that one's getting hammered right now. And intermediate bond category, which most of y'all have in your 401k plan, is down about 9%. So we're in one of those strange markets where stocks, bonds, everything are kind of all following a similar downward trend. Stocks and bonds have different reasons why they go down. Bonds, as interest rates rise, long-term bonds lose money. Simple. Stock markets obviously have a lot of different factors that factor into that, and uncertainty is what the markets hate the most. And we have a lot of uncertainty this year. 6 out of the 70 asset classes that we monitor through Morningstar are positive for the year. So they only 6 out of the 70 are actually positive for the year, led by Equity Energy, which is up a whopping 46% this year. So if you're fortunate enough to have Equity Energy as part of your portfolio, we would have been putting some money into there as well too. Mainly that is due to the rise in the oil prices and the gas prices and all of that. So it's been a tough year so far. We're not quite halfway through it, but this is why proper asset allocation and risk management has never been more important. We're coming off of a time frame where it seemed like everything just went pretty much straight up. The markets are behaving the way the markets always behave. We see volatility. We've just happened to come out of a very extended bull market or upward market. The S&P in May technically dipped down below 20%, which is the definition of a bear market or a downward market. And the NASDAQ, the technology laden, is technically in a bear market right now. So there's a lot of talk. Is the end of the bull market here? Are we going to have extended bear markets or so? Nobody knows. So this is why we do what we do. So just a couple pieces of advice. One, you may want to look at your risk profile to make sure that it matches with what you're getting advice on. So either talk to your advisor about using their risk profiling tools, or within the Plan Confidence software as well, click change profile. And then there's a little risk tolerance in that first sentence there. There's a hyperlink, which will match it up after you answer 12 questions, whether you should be moderate, aggressive, so on and so forth. So you may want to double check that just to make sure that you're still on track. And once you find out your proper risk profile and you get settled there, the upside to the down markets is your future contributions are working harder than ever. It's almost like a gift. In an upward market, you buy less and less shares every time you get paid. In a downward market, you buy more and more shares every time you get paid. So right now, your future contributions are doing a lot of heavy lifting. They're buying everything on sale. So I know it's extremely scary right now, but do not stop contributing to your 401k, your 403b, your TSP, wherever your employer has your money and with your paycheck going into, continue to keep contributing. Your future contributions are buying more and more shares. This is the power of the two sides of the employer-sponsored work plan. You have the money in the plan, which we're going to diversify and take advantage of risk and reward and all that. But then you have your future contributions, which in downward markets like this are buying more and more shares. So please do not stop contributing to that 401k plan, because your future self is going to thank you for continuously plowing money in when everything is on sale, even though it's extremely scary. And then anything else that you might have a question on, please ask your advisor. Do not be shy. We know that the times now are challenging. It's not just, hey, everything's going up. So please reach out to your advisor if you do have any questions, whether it be on our service or any type of financial planning, or if you're a little bit nervous or anything like that heading into this volatile season. Summer, we have lighter trading because a lot of the people take off and they go on vacation. So we'll see if they do that this year or not. Nobody knows. But with that, I just want to say thank you for choosing Plan Confidence. Please let your friends, family, coworkers know that we exist. Talk to your advisor. If any of your friends, family, coworkers would like to sign up, have them talk to your advisor to get their account open and established, and they too could be getting ongoing professional advice for their work-sponsored plan. So with that, I'm going to say, make it an awesome June. We got the start of summer coming up and a lot of hopefully awesome summer memories. With that, I'm Kevin Clark. Peace.